All right, let's finish off Chapter 12 by looking at Learning Objective 5, R&D activities or research and development activities. What are research and development activities? A lot of people have different concepts about what R&D is. Usually involves some sort of innovation or discovery. Well, yeah, it can, but in terms of accounting, we have to be very specific about what we mean by research versus what we mean by development. So down below, when we're talking about identifying R&D activities, research specific activities involved critical investigation. Oh, Kevin, of course you would do that. Critical investigation aimed at discovery of new knowledge. That's the key. Research, we're trying to find something new, some type of innovation. So that involves laboratory research into discovering new knowledge, search for applications of new research findings. Okay. In the case of development, it's sort of the next step. It's research, then we develop, right? So translating research findings into a plan or design for a new product or process. So it's kind of like taking the one above and saying, next step, let's develop that. Okay, so research and development, two different things. Research first, then development. Now that we know what research and development is in general, let's talk about what the costs are. And the way to sort of look at costs is to sort of talk about it from the perspective of what are the activities involved in the research and development process. Well, when we're discovering and we're trying to implement new types of new knowledge, there are lots of different costs involved in R&D, right? So think about this: materials used to build something, equipment, facilities, personnel, salaries and wages, purchase of other intangibles. Maybe someone has a patent, we want to buy it so we can expand on it. Contract services, indirect costs, and this is kind of similar to what some of you might recall from Accounting 2301, the managerial accounting, similar to manufacturing overhead, or MOH, right? So indirect costs. Hey, we may be incurring these costs for lighting or utilities, but indirectly it's being used, those costs are being incurred for learning about something new, some sort of new process. So in general, what I want you to think about in terms of research and development, think about an ancillary or an analog to inventory. Think about inventory. Recall from those chapters on inventory, hopefully it doesn't cause you too much stress, all the different costs associated with getting and building inventory. Things like freight in, transportation, and insurance. Not just on the products, but also on people, right? If we're going to have somebody engage in some sort of laboratory experiments, we probably want to make sure that we have some insurance in case something weird goes wrong inside that laboratory. So that's part of the personnel costs from up above. The overhead in general, overhead includes things like taxes, property taxes, right? Utilities. There's a lot of things. So if you recall any of that stuff from Accounting 2301, you're kind of in the right place here, because that's what research and development's all about. It's kind of like a mad scientist incurring all these expenses. And you bet things like legal fees, right? How do we protect, if we find something, how do we protect it, right? Now, generally speaking, if it goes into a patents, right, that's something separate. But if there's legal fees associated with just discovering and trying to figure out, hey, we found a new process or a new product, how are we going to use it? If there are legal fees involved with that, those things are generally going to be called R&D activity, R&D activity costs. So the key distinction here is that there are lots of expenditures in trying to discover something, figure something out, try something new, right? At what point, though, do you stop expensing all of these and start capitalizing them? Well, that usually happens at some sort of point of viability. And I don't want you to really worry about that. Right now, just think about R&D activities. Lots of just kind of poking around in the dark, trying to find something, right? All that aiming in the dark is just expensed, right? There's nothing to capitalize there if we're just trying to find our way through the woods, okay? It's only when we discover something through the woods That's when it gets interesting. That's when we can start capitalizing some stuff. So down below, kind of go through just some more explanation about R&D versus R&D that's expense versus when we start capitalizing expenditures. So as a general rule of thumb, research and development costs are not intangible assets. They're not. It's just a way of sort of like trying to find some stuff. Okay, if you were to say that R&D is an asset of any kind, is to say that it should be capitalized, not expensed. The R&D costs, we don't really know if there's any value to this. We're just trying to figure stuff out. So the rule of thumb is expense R&D costs. Okay, so they're not assets; they're just expenses. But R&D costs typically result or create something that a company patents or copyrights. So yes, it can lead to discovering something that we might put a patent or copyright on. So if we're talking about a band that's in the studio just kind of plucking around trying to figure out, is that a song? Is that a song? I mean, until they actually get a song that they want to actually record, they're just sort of playing around. And generally speaking, if you're in a band and you want to record something, you do a lot of the plucking around and playing around with stuff before you go into the studio, because studio time is very, very expensive. So most of the time you're in a garage, you're sitting around with your buddies, you're just trying to figure out, hey, what's a good song? Find 3 chords, D, G, A, start playing around with it, come up with a song, right? If you have a song, then go into the studio, put it down on wax, then sell it. Everything up until the moment you go into the studio is just R&D. You're just trying to discover a new song. It's expensed, right? Only when you find something, that's when you can start capitalizing it. You have a song, put it on wax, then file a patent or copyright on it. Okay, so some different types of things you might discover: new product, new process, come up with a new idea, a new formula, composition, a literary work. Everything up until the point of discovery is expensed. So think about point of discovery, right? Expense, then you can capitalize. That's a general rule of thumb. I'm not going to ask you to sort of figure that out. I just want you to be aware that there is sort of a timeline, all this stuff. But the key thing to remember here is that companies must expense all research and development costs as they are incurred. But you can capitalize costs for specifically related to patents and copyrights, because that is when it passes the point of discovery or the point of viability. That's another one that you might hear a phrase for. So you hear research and development, think expense. R&D equals expense. R&D equals expense. That's it. Period. Don't overthink this. When it's no longer R&D, we're talking about it's for a patent or it's for a copyright. A lot of companies have huge R&D expenses. So if you look at, I'm going to say on the next page, Merck, for instance. Merck does a lot of research and discovery of different types of medications. So if we pull down their 10K, here's sort of an abbreviated look at their 10K. This is in millions, so you have to add how many zeros to this? You have to add 6 zeros. So add 1, 2, 3, 1, 2, 3 to all of these guys right here. So it's not 40,000, it's not 40 million, right? It's $40 billion in sales, $40 billion in sales. And when you look specifically down their income statement, you see that there will be a line for research and development. And in 2017, it was about 10 billion that they spent. 10 billion they spent on research and development. 2016 it was 10.1 billion. And before that it was 6.7 billion. Jeez. 6.7. These are huge numbers, right? But think about it, right? Once they find like the magic pill. I mean, imagine Pfizer. You work for Pfizer, you discover the Viagra pill, all of those billions of dollars into research and development of how to help older guys or any guys get it up, right? All of those are expensed. But once you get that little blue pill, now it's like we're going to start selling this thing, raking in the dough, right? All those expenses, when you're looking at these types of companies, it's understood. They have obscene amount of expenses for research and development. And it only takes one discovery before you start getting billions and billions and billions and billions and billions of dollars for the foreseeable future just in helping men with erectile dysfunction or whatever. So down below, I have a bunch of different examples of how to classify different types of expenditures. And we're going to go through these pretty quickly here. Indicate in the items below how you would generally be reporting these in the financial statement. So if we investment in a subsidiary company. So if we buy stock in another company, generally we would classify that as a long-term investment, as a long-term asset or long-term investment. If we purchase timberland, in other words, not timberland the company, not the boots, but if we buy timberland, in which case we're going to fell the trees and sell the wood, that would be classified as part of our property, plant, and equipment, natural resources. Cost of engineering activity required to advance the design, key phrase there, of a product to the manufacturing stage. Cost of engineering. Now, this is just basically sounds like R&D. So if it's R&D, think expense. R&D means expense. There's no R&D asset. A lease prepayment. A lot of you know what that is, prepaid rent. I love ending on these types of chapters because it sort of brings back a lot of different memories. Cost of equipment obtained. That's just PP&E. Bought some equipment. Cost of searching for applications of a new research. That's more like the development side, but still R&D. We think R&D, think expense. R&D equals expense. Don't overthink it. Just remember it. Next one. Costs incurred in forming a corporation. Generally, we just expense those things. Legal fees, what have you. If you're ever interested in starting a business, by the way, by all means, feel free to contact me. I've had students in the past. I had a student recently ask me if I'd be willing to help them, advise them on how to start a nonprofit. And so if you ever come across any questions about starting an organization, by all means, feel free to reach out to me. Operating losses incurred in the startup of a business. Well, if they're just operating losses, that just shows up on the income statement as operating losses. Recall that was one of the subtitles that you would see in a multiple step income statement. Those are just operating losses. Training costs incurred in the startup of a new corporation. Training costs are essential. Anytime there's a people coming on board to a new corporation, they always have to go through training. So it doesn't even really matter if it's a startup. There's training costs for people all the time. People are leaving, people are coming in, we got to train them. So generally those are just expenses. Let's call those part of the salaries and wage expense or some type of miscellaneous expense. Purchase cost of a franchise. Well, franchise is a type of intangible asset. So just call it an intangible asset. And we may just go ahead and call it, or we can just call it a franchise. How we call these things in the general ledger might be very, very specific. But when we report these things in our financial statements, they're going to be kind of broad. So intangible assets is descriptive enough. Goodwill generated internally. This is a key phrase right here. If it's goodwill generated internally, we do not record or report. Okay? We generate some goodwill internally. That's great, man. People are loving you. That's awesome. That goodwill may transpire, might translate into some value down the road. Maybe that might have, maybe how that turns into value is in the form of greater revenue in the future. Generally, goodwill, when we use the word goodwill in accounting, it means something very, very specific. It means goodwill excess that we paid over the fair value of net assets of the company. If you hear someone talk about goodwill, make sure that they're using the term very specifically. Yes, there's goodwill generated internally. I've rarely heard people talk about goodwill generated internally. It's mostly just external. Cost of testing in search of product alternatives. So we're like searching around, we're poking in the dark. That's R&D, which means expense. 17, cost of conceptual formulation, possible product alternatives. Conceptual formulation. It's not a formulation, it's a conceptual formulation. They're thinking about different ideas. Hey, what if we took this part of a molecule and we rearranged it? What kind of drug do we have there? Well, if we're trying to just build the structure of what the chemical compound composition is, that's just poking around in the dark. So that would be R&D, and R&D means expense. Cost of purchasing a copyright, we'll just call that an intangible asset. Call it copyright XYZ. Research and development cost, that's kind of obvious. No real mystery there. Long-term receivables, those will be just called a long-term asset or long-term receivable. Cost of developing a trademark. We're developing a trademark. Okay? If we don't have a trademark, if we have nothing to trademark, the idea about just developing a trademark is just kind of like, hey, what do you think about this? Hey, what do you think about this? A lot of advertising agencies develop trademarks, but when they pitch those things to their clients oftentimes refuse them. They say, nah, that's kind of ridiculous. Don't even bother with that. In which case, we expense until we get like a thumbs up from whoever is the beneficiary of the trademark. Cost of purchasing a trademark. This is different though. The trademark is established. We're just purchasing it. So this is more like just like a copyright. It's like intangible. Call that intangible asset. Building a trademark, expense it. Purchasing an established trademark. This is established. That's an intangible asset. We bought something that already has value in it. Now let's go through another example here. Compute the amount to be reported as research and development expense. Okay. So similar to what we see above, do we include it as part of the research and development expense, or do we capitalize this thing? Okay. Cost of equipment acquired that will have alternative uses in future R&D projects. So, hey, we might buy a spectrometer or a microscope or maybe a gigantic freezer, but the freezer can be repurposed into something else if we decide to go a different route. If it's repurposable, has a 5-year life, it's essentially equipment, and what we're going to do is take that 208,000 divided by 5 years, and yes, ordinarily that would be depreciation expense, but in this case it's specifically for research and development. So what we're going to do is every year we will expense $56,000, not as depreciation, but as R&D. So yes, there are some, so R&D expense can contain depreciation. R&D expense can contain salaries and wage expense. R&D can include a lot of expenses that ordinarily are just itemized separately. Okay, but the difference here is that the equipment is not used to generate money for the business. The equipment is used to help discover something. So in that case, we simply say it's not depreciation expense, it's just R&D expense. Materials consumed in R&D projects. This would be like supplies expense, except for that these are materials or supplies consumed in trying to discover something. So we'll just call that $59,000, the full $59,000 will just be R&D. Consulting fees paid to outsiders for R&D projects. Consulting expenses, contractual expenses, right? Those might appear somewhere typically in, say, salaries and wages. But in this case, these are fees paid specifically for what purpose? R&D. So we'll just go ahead and classify them, lump them in with everything else. Personnel costs involved in R&D projects would be salaries and wages in the administrative side of the income statement. But in this case, it's for R&D. So we say that whole amount, 128, will be put not in salaries and wage expense, but R&D expense. Okay, it's an expenditure. It needs to be expensed. But where does it show up on the income statement? That's the key. If it's for R&D, move it to R&D. Indirect costs reasonably allocable to R&D projects. Like this is just like manufacturing overhead. If it's R&D, let's put it as overall R&D. Materials purchased for future R&D projects. Well, these haven't been consumed yet. So these might appear on the balance sheet as like a current asset, like supplies. Right? We won't necessarily expense these, but when down the road, when we do consume those will just appear as R&D expense, not as supplies expense. So that's essentially all of Chapter 12. If you have any questions, please feel free to contact me. Otherwise, thank you so much for a wonderful term. Don't forget to tip your waiters on the way out. Cheers!